let's get into what these physician loans look like, what the requirements are, and how they're better and unique compared to your traditional, conventional Fannie, Freddie, FHA type loans.
So it follows conventional guideline, but there's some massive endorsement changes that really make it a physician loan. One of them is there's no money down required up to 1.25 million, and there's no private mortgage insurance on the loan. That's the big piece of what makes a physician loan. A physician loan is that a doctor or client can buy a home, put no money down under that 100% cap, which ours is 1.25 million, and there's no private mortgage insurance on that loan. Now that's one of your biggest banner endorsements or banner differences between what a conventional loan would be versus a physician's loan.
Yeah, so hold on there. So you said no money down, up to 100% financing, correct?
Mm-hmm.
But actually, it's up to 103 on your guys' loans, correct?
It is technically.
You guys will go just a little bit over.
We'll let them finance their closing costs. That 3% allows the customer to finance up to 3% of the purchase amount worth of closing costs. If you're a resident and you're buying 250, you probably still shouldn't have any issues with that 3%. In closing costs. Obviously, if you're buying $1 million house, you're not going to have $30,000 in closing costs in most scenarios. So that 3% is designed only for the use of cost to close. Like you can't finance differences like in an appraisal or something like that, but you can definitely pay your closing costs. So let's use an example. You buy $1 million house, you're coming out of training, you've got expenses, you're moving your family from across the country to across the country, and you want to buy a house, hold on to your cash. You can buy $1 million house, finance all your closing costs as a part of it, get into that house without coming out of pocket with any money, and have no PMI on that loan, and typically an interest rate that's significantly better than that of a conventional loan. It really is a great deal. When I see physicians that use non-physician loans, I kind of think to myself, like, well, what are you thinking? You've got access to this loan because of the time you've spent training for your profession, getting a medical degree. You've got access to this. Same kind of thing for you, Ryan, being in the military. You've earned the right to use that VA loan by your service to our country. You've earned the right. And in 90% of scenarios, it's going to be the best option for you.
Right.
Same thing with the physician's loan. When you get your medical degree, and you're I don't want to say medical professional, but you're a doctor, you're a physician. You've earned the right.
Dentist.
Yeah, dentist, optometrist.
We've done dentists together.
Mm-hmm. Yeah,
yeah. Let's touch on that actually. And I don't mean to interrupt you there, but I want to make sure we hit this point. Will you kind of run down the list of the specialties that do qualify? Because it is a little bit unique. I say medical professionals, right? But you make a good point. We don't want to say medical professionals because it doesn't relate to all of them. So will you give us a list of kind of all the different fields, and maybe not all of them, but a majority of them?
So here it is right here. Doctorate of Medicine, DO, like we said, Doctorate of Dental Surgery, Doctorate of Optometry, which is an OD. So it's those four specialties: MD, DO, DDS, and OD.
Okay. Awesome.